have very important guests joining us. Sunil Singhania of Reliance Mutual Fund and Naina Lal Kidwai, past president at FICCI. Sunil and Naina, thanks so much for joining us. Naina, I'm going to start off with you. For once, going into this budget, there seemed to be leeway for the finance minister to slip just that bit on the fiscal deficit front. But from the looks of it, he's played by the book. And it couldn't be better because he's been prudent on the fiscal deficit front. He's given a big boost to infrastructure and rural areas with higher allocations to relieve stress. And he has taxed the rich on many counts. What's your take on this budget?
Well, I think the analysis has to be exactly as you suggest around the detail on where the money is coming from. There's clearly no number this year mentioned for disinvestment. In fact, renaming of the ministry and a focus for the public sector companies to sell their own land, etc., which goes back into their balance sheets, does maybe not suggest that there's a big amount coming from there. We don't know what the plug number here is for the black money bill, which kicks in June. And which I think is great, because to mop up money which can then help in terms of ensuring that we adhere to the fisc is great. And I think maybe that is the direction that this budget is going in, and which number we have no indication of. The spend in infrastructure is terrific. I worry about bank capitalization. I think 25,000 crores this year is not adequate, but it is part of a journey to the Basel III requirement, which, as we know, is 1.8 lakh crore. And we had 70,000 crore announced last year, 25,000 this year. So are banks going to be able to come up with the balance? And they may be able to do some of it, but they are not in the peak of health. And I think I would look to see how that capitalization number develops over time. On the face of it, maybe 25,000 crores this year is not adequate. I think we cannot ignore the affordable housing pluses, including rent income being given a boost. What this might do is put some money into the hands of lower middle class people, which enables spending and consumption demand to go up, as indeed would rural demand go up. So these two pluses on the consumption side, huge investment spend for infrastructure, would suggest a pro-growth budget. I worry there is not enough for the private sector here. And how do stock markets come back up if the private sector is kind of left to its own devices, which on the face of it appears to be the case.
Right, Naina, you preempted my next question to Sunil, because that's the worry, Sunil. I'm going to, ask you this question in two parts. First is the wild gyration within the market intraday on the Nifty so far. We've bounced back from the lows, but as that 10% tax on dividends was announced, as that STT increase on options was announced, the markets kind of cracked. My question to you is that capital gains has not been tinkered with. That was a big concern going into this budget. So on the whole, has it been good or bad? How would you assess it?
See, very clearly, as you said, the tax on dividend has been a sort of a negative. But apart from that, I think across, segments, the budget has come as a positive, There's been no tinkering with the capital gains tax. I think tax rates generally have been pretty stable. There's been a lot of emphasis on spending. And the good thing is that the fiscal deficit of 3.5% has been maintained despite a significant rise in expenditure. And at least our own internal estimate has been met both in terms of revenue as well as expenditure. It's still early days. We still have to see the details as far as the fine prints are concerned. But I think overall, except the tinkering with the dividend distribution tax, an additional sort of a small payment there, I think the rest of the things have been pretty good, and fiscal deficit without compromising on the expenditure has been the biggest positive.
Sunil, if you were looking at domestic consumption to drive the economy, and we will cut to that press conference by Hasmukh Adhia, I want to come back to what Naina pointed out, Sunil. The fact is there's very little for private investment, for private pickup. And also on top of that, you've put a surcharge or a cess on, for infra on passenger cars. That was the one piece that was starting to see a pickup. Are you disappointed? And what would you, say about the auto sector right now?
See, one is as far as the consumer is concerned, I think the big outlay on the pay commission is going to be a big boost. There's been nothing done to increase taxation anywhere, at least for the vast majority of Indians. In fact, there have been small benefits here and there which have been given, including, deduction on rent, including also the interest paid on housing loan, etc. So overall, there is nothing which has been done in terms of trying to take more from the consumers large. Yes, a little bit of cess here for so-called luxury goods, which would include passenger cars as well as the vices like cigarettes and all. I think those are okay, but by and large, there has been nothing done to take away more from the consumers, and that itself is a key positive. As I said, there have been small benefits here and there. Again, we have to see the fine prints, but overall doesn't seem to be a budget which will restrict consumption as such.
No, Naina, you did mention that 25,000 crore rupees is not going to be enough, though the FM did say that there would be additional allocations. He also hinted at consolidation in the public sector bank space, and that's something that a lot of experts have been calling for. And, IDBI, for instance, he specifically mentioned that the government will bring down its share below 50%. Do you think one way of dealing with this whole NPA mess can be this consolidation of strengthening the hand of many of these banks? And do you think this is tangible? Because it's not been done. Various attempts have been made in the past.
Well, a very important step is the final announcement which has happened just before the budget on the Banking Bureau. And the nature of people who are on it under the chairmanship of Vinod Rai, I'm sure will provide a little bit of input. Yeah. Hi. Should I go ahead? Hello? Hello, can you hear me?
Please go ahead, Naina, if you can hear me.
Lost the connection.
Okay, there seems to be a connection problem, but that's an important measure that was announced just before Vinod Rai heading that bank bureau, and possibly a lot of the focus now on what comes out of that and how that whole consolidation piece goes. But we will come back to Naina in just a bit and also get you, Sunil Singhania and Naina Lal Kidwai still with us. Naina, we got cut off when you were talking about how you see the entire consolidation in the public sector banking space panning out, and how seriously are you looking at the NPA situation that's been an overhang on the economy, and how do you see it very quickly panning out? Do you buy into the government's promise of bringing down stake, of looking at consolidation and getting some kind of corporatization in over there?
So clearly the NPAs have seen a lot of focus from the government. It hasn't gone without attention, and it's not necessarily just a budget matter. Although there was mention of FDI in the sectors, including asset reconstruction companies, so we need to see what is happening there, because we do need a very robust asset reconstruction exercise happening simultaneously. I think we were hoping to hear a little bit more on dispute resolution. We all know the bankruptcy bill and commitment to see it through is there, but will it see the light of day? These are all very important aspects of what the banking sector needs to return to health, because we do need to have a mechanism for working through these assets, and much of this lies outside. But I don't.
Well, that line with Naina is really bad, but let me get Sunil into this. Sunil, on the whole, one could argue that the strength in the bank stocks is also a factor of, a lot of short positions out there, and hence a kind of spike up. For the record, we are seeing a lot of action on Vedanta also as a stock because of the dispute resolution and the off the court kind of settlement on on taxation. A quick update on the stocks and which are the stocks that are leading the up move in the market. One is ICICI Bank, which is up a very smart 4.5%. We have Vedanta, which is up about 4% at 74 rupees, and we have Tata Steel and State Bank of India. So it's really banking stocks that are leading the gains as far as the markets are concerned. So that's a quick summation of what is happening in the markets. Of course, all eyes on, well,